Live from New York, I'm Alex Steele.
And from London, I'm Guy Johnson. This is Bloomberg Markets. Alex, time now for Futures in Focus. Scott Bauer of Prosper Trading Academy joins us now from Chicago from the CME. Scott, WTI crude trading almost exactly at 50 right now. Yep. If OPEC Plus doesn't act, do we see further movements to the downside?
Yeah, I think OPEC Plus is going to act, whether it's in a week or 2 weeks or back in March. I mean, right now, the big question is, is Russia going to join in? OPEC, the rest of OPEC is trying to galvanize that relationship here. I do think there is some downside concern. However, I think the market is pricing in right now that they are going to act somehow.
Scott, do you have a feeling of what the downside is? The rhetoric is if it breaches, say, like 48, you're going to have some financial selling as the banks have to wind up selling swaps to hedgers, to producers who sold forward some oil. Do you have a sense from a financial perspective and trading perspective what the downside could be?
48 is definitely an important number. Below that, it's really quite significant. It's really down around 42. I'm not trying to, paint that picture just yet, but that 48 number is really, really important. And I think what is just as important is looking at the relationship of West Texas to Brent. It was just a few months ago. That spread was about $10. It's under $4 now.
Scott, Brent crude down 18% year to date, copper down by only 8%. Why the different performance?
Copper is really stabilizing, in my opinion, right here. We all know that China is the largest consumer in the world of raw materials. Copper, the biggest play, for China there. It is stabilizing a little bit, and I think that the bigger macro concern is in the oil space right now because of its far-reaching consequences. However, copper is as poor as it's been. Again, if you look at the charts, to me, it is stabilizing a little bit here.
Yeah, it seems like the other part of it has to be the supply picture, because we could be getting some resolution in Libya, which would bring back 1 million barrels of oil a day from that region, versus copper. We're just still under a lot of supply constraints in South America. What's the trade to be made here? Like, do you want to short oil, long copper? Like, is there a way to play that part?
I wouldn't look at the two of them together. However, if I was going to look out 3 to 6 months from now, I'd probably be more neutral on crude, more neutral on oil, and bullish on copper.
What role is the dollar playing in all of this, Scott? We continue to see the dollar grinding higher. It is the safe haven trade. Obviously, a lot of this stuff is priced in dollars. As we continue to see the buck rising, is that going to continue to put downward pressure on these commodities, and how much of a factor is that?
It's a huge factor. In fact, 4 or 6 weeks ago, the dollar was actually under some pressure, and then the coronavirus, really hit the markets, and you're seeing that safe haven trade to the dollar. So for the near future here, there certainly is a lot of tailwinds behind the dollar, but, any sort of stability, hopefully that we get with the virus, if we see it tapering off, that may actually affect the dollar to the downside as well.
So the rhetoric in the market, Scott, seems to be that the back half is going to wind up being okay, that we're going to see some kind of demand recovery. If I look at the destruction that we've seen on the curve when it comes to oil, I don't think I've ever seen anything like that, the kind of move that we saw from backwardation to contango in like 3 weeks. How do you position for maybe a better half in the back half of the year?
So remember why we're seeing that big, disparity there, because it was just, what was it, a month ago, 6 weeks ago, the attacks that we saw that really drove the price of crude well over 60. So it wasn't so much, of a fundamental type supply demand type of situation as it was a geopolitical event. So if you take that out of there, you are seeing this massive sell-off, but you're obviously not going to see that big high to the bottom that we're seeing right now. Nonetheless, we are seeing that situation right now, the contango, and I think you do have to position yourself to see crude coming back into line. And like you said, Alex, that back half probably pops up a little bit.
Scott, final quick question. The ags. The Chinese have set themselves up to buy an awful lot of agricultural products out of the United States. Well, okay, is it going to happen?
Sorry to cut you off there. I really am. It's not going to happen. And I think the U.S. realizes that. I think the U.S. realizes that first and foremost, for the benefit of the world economy, they've got to get the coronavirus under control. And if that means that China has to wait, postpone this promise, the phase one deal, 3 months, 6 months, 9 months, I think that's going to happen.
All right, Scott, thanks a lot. Really appreciate it. Scott Bauer of Prosper Trading Academy.